Fanatic stream for the afternoon of Wednesday, September 3rd, 2025. Hope everyone's had a profitable trading session thus far, or if not, that you're controlling risk appropriately. If you're first one in here, if you can give me one for picture and sound, you know the drill. It really helps me. It looks like everything is working, but I just like to know that the volume, sound, picture, and everything are good, so I don't do a whole stream with no one being able to see or hear it. All right. Also want to remind everybody this presentation is for educational purposes only. The opinions expressed will just be mine. I'm the presenter, and that all trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. If you've followed my streams, you know that I'm predominantly going to be placing trades in simulated accounts that are offered by the variety of prop firms that I trade with. All right, thank you for all the pictures and sound. Now, the next thing I want to point out is that the topic for today is going to be a little different. So before I get into this, not going to do a whole lot of trading. Just been trading gold on the short side in the offer zone, but the market is closed, so I'm probably just even going to cancel this. The gold market's closed, and I am long the S&P from just about the bottom, so that was pretty nice. You can see an order way down here. So that's about it. Unless something really starts moving there or wakes up, I'm going to concentrate more on just this topic, and I'm going to start to do these theme-based streams, and if markets wake up, we get an opportunity to trade. If great, if not, then we can focus on the theme. By popular demand, the theme for tomorrow will be the Thor copier again. So a new release came out. I tested it a little bit today. Did still have a few issues, but they were mostly with tick blaze on the tick blaze side, I think. It worked well for other connections, and I tested it across a variety of connections. So tomorrow, I will be focusing on the Thor copier, and because of that, ideally be in some trades or test some trades in those accounts. All right, so if you read what I wrote in terms of the title tonight, it's interesting because the video that I'm going to comment on, and I might start doing these comments or these reaction types of videos. It seems to be popular content. First thing I want to point out is, so I don't know much about this woman, Tori Trades, other than she has a very large following, and she has a good team because her lighting and her videos are well done generally, and she seems to have a great spirit and a great attitude, and I love the fact that she's created this big business around her trading journey. So no shade at all on her, but this video that she created, and the first one I've ever watched of hers, did create a reaction, and that's the reaction that I have to share here, because starting out, she's really well-intentioned with this video. I'm not going to go through all of it, but essentially she lost a lot of money. I assume it's live. I'm assuming she's honest with that. And she lost a lot of money trading huge size in a precious metal, not gold. And the fact that she shares that is okay. It's okay on the surface. But the point I want to make about these content creators, whether they're well-intentioned or, of course, the ones that we don't really need to mention, that I know that a lot of people know that that's just tradertainment, but there's a lot of people that don't know that that's tradertainment. The Lambos and these Miami people and the people taking millions of dollars of withdrawals from Apex, that true is not validation of anything. It really isn't, and I'll get into that in just a little bit. So everyone is going to also have a different style, of course. Now, I like to think, and I will be the elder statesman in the room, I know for a fact that I have more experience trading the futures markets than anyone creating content. That's just a fact. And the fact that I made my way to YouTube, and many people will believe that anyone that is creating any YouTube content doesn't make money from the markets, that's fine, whatever you want to believe. I've been as transparent as I can be with the fact that I don't make much money from the content. I don't make much money from my trading education. I don't make, on a relative basis, all that much money from trading the futures markets. I have done well in my life and my career. I have a lot of other investments in many other things that I do. This is a viable business that I do. I am starting because I want to provide the unwavering faith and proof to trade funded prop accounts and take withdrawals and do what I'll show you here. In terms of validation and proof, it's just having this up on the screen, which you can't doctor, and you can come back to this stream a year from now. I will still be streaming, and there's a super high probability that the count on these PAs from Apex, just as an example, I had to choose one firm. I know people have issues with Apex, but I had to choose one firm. So I just chose Apex to fund the majority of the accounts in and to be the ones that I share most of the trades with when I'm doing it in the trade room. I have now 10 prop shop accounts, and I have a variety of others. But getting to the point I want to make today is that even when a well-intentioned content creator shares a story of losing $250,000 as being highly overlevered in 40 contracts in platinum, and then goes on to say that she was showing this to traders in her room, this is toxic whether the trade had worked or hadn't worked. Okay? It's toxic whether the trade had worked or hadn't worked. Because what we have to do is sever the difference between, I'm trying to think about the best way to think about this, because it can actually be damaging in this space, because this is money. You can throw up a disclaimer, you can say whatever you want to say, but until this occurred, I have no idea what exactly she's teaching. She teaches something with trend lines, which are not back testable and have no predictive value, but I don't want to really get into her strategy, because ultimately strategies don't matter if you manage risk. And clearly in this trade, she happened to not manage risk. And all of us, especially when you're younger, and she's considerably younger, of course, than I am, and she's probably around the same age as a lot of her audience, I get that these things will happen. Many of us who are even older share in my trade room that you guys go on tilt. I don't have a lot of sympathy for going on tilt. I really don't. It's not necessary. You can read as many trading psychology books as you want. You go on tilt because you don't have the skills. You go on tilt because you have bigger red numbers on your screen. You go on tilt because you're not sizing things properly. You go on tilt because you're not abiding by just a daily risk budget. That's the only thing that you have to do. Okay? So back to this particular video. It's one thing that she's showing this trend line with volume at the bottom of it, and no volume profile, and no, again, I don't really know what her strategy is. But then to go on and share that, let's just add it all up. Huge size, platinum, and then sharing this with, and the comments are highly positive. Go get them, you'll snap back, all these types of things. As I want to point out, this would have been worse if the trade had actually worked. And she said she put on the trade because she was watching a podcast with a bunch of other of these dipshits that are claiming to trade big size and have done great things. Now, here's my point. I believe her that she really lost $250,000. I believe her that she showed this position to probably thousands of followers, maybe people that follow her casually, some people that own whatever she sells. I really don't know if she even offers anything. Potentially she's just a content creator and everything is free. But even free stuff and sharing this is a problem, because it contributes to this culture of that's the aspirational thing to do, okay? And again, whether it was money that was made from the markets or money that was made somewhere else or money that was given to her or money that she earned when she was in college doing whatever, that part doesn't matter. What matters is that the journey that's being shared by a lot of these content creators now is one about big numbers and sizing up and doing that. This is the wrong message to send. It's not aspirational. It's not great when you show that, look, if this had been a manageable loss or even a larger loss on a few contracts, how many people are trading platinum at that size? How many people are especially trading platinum at that size using a trend line? So I'm going to leave a link to this in here, and I just wanted to get, a lot of my trade room folks are saying, tune in this afternoon for Rod's rants. By the way, were you guys at the trade lab? Hopefully the trade lab was more productive than this. We'll look at some charts in just a second. But I felt terrible for this woman, but I felt worse for what's happening in this space, because I don't want to be sexist, but I'm just making an example. If she was creating content around makeup or yoga or fitness or Pilates, again, I know that sex is more female-oriented content, but there are many women now in the trading game, and we need that. We need that because they offset these Lambo dipshits in Miami. But it seems like she's been pulled into that a little bit, and she felt like she needed to trade bigger. And she needed to trade, maybe she trades platinum all the time. I keep trying to say palladium. Who the fuck trades platinum? I mean, I felt like reaching out to her and going, hey, let me show you the treasury market. If you want to get bigger, I'll show you how to get bigger in the treasury market, right? Doing sane things, using fundamentals, right? I do a lot of technical trading too to find entries, but when you're trading bigger size and things, you can't have a trend line crossing here with a bunch of volume at the bottom. And again, it would have been worse if this trade had worked out. She even pointed out that she got some signal, some, whiz dig bang signal. What the fuck was that? That had to be, is some sort of pattern recognition thing that you have that shows that two lines have just crossed, so you're going to risk hundreds of thousands of dollars? As apologetic as she was, and as much as she feels that this is transparent and you need to share this kind of stuff, if there's any connection between trading that big and your education stuff of what you're showing, you are doing a disservice to anyone who's watching you. If those two things, so for instance, in my world, I do have some stuff going on off screen. I have pointed out there's no way it's not beneficial to anybody to see that. I've had issues, and I know, some other big players that have been around for quite a while and are extremely good traders. Guys like John Carter and stuff like that. I still cringe. I don't like when they show 100 contracts, 1,000 contracts, how I made $2 million in Tesla. So what? It doesn't help anybody. And here's the other thing. You can't really size that down. That part is bullshit. If he has 10 million and you have 1,000, in no world at any size are those comparable in terms of how that trade plays itself out. Entry, exit, sizing, whether it's a spread or not, how you can hedge, all these things. It has no bearing. So getting back to the world and this is not a commercial for me. Like if you're here watching the stream for the first time, you think, well, this guy's just leading this all up to, but what it is a commercial for is that one thing I know you can do is you can't put on 40 contracts of platinum. I know what you can do is eventually buy all these prop accounts if you wanted, and it wouldn't even cost you that much money. All these accounts in total is about $1,000 in total. I never reset them. I funded only 40 accounts ever at Apex, and they're right here in front of you. So I'm just hoping that people can gravitate towards, and look, if people can separate when they see stuff like that, but it's not happening because younger people are building bigger followings. They know how to use the tools. They know how to work with the algorithms. They have grown up in this space, and they're getting a lot more attention and a lot more eyeballs. And I'm not envious of that. I will do my little thing and hope people find the little corner of the world, which is, here's the other thing that's interesting about Tori. My understanding is that her and a lot of people have come over from trading FX and stuff and found their way to futures. I've been screaming that for 15 years. So this is good. We have a whole bunch of people, and now we have a lot of people coming from CFDs also over to pure futures, which is great. And we have 25, 30, 40 plus prop programs. Lots of choice. Probably some that won't make it, as we already know that. I've promoted a few that didn't make it. So people are coming over to this lovely world of futures, which is what you should day trade. And they're stinking up the joint a little bit. So anyway, I'll leave it there. That's about all I have to say about that. I don't know. Let me grab this in case you want to watch it, and I'd love your thoughts on that, you're welcome to check it out over here. Okay, and maybe you guys know more about exactly what went on there. Okay, gold is finally having a little bit of a pullback. You can see it right here. So I'm in it in these two accounts.
Order modified.
We'll just close that there.
Position closed.
And again, I'm not here I don't share these all the time, but this is frequently what my day looks like. If you guys ask, I'll show them every single day if you come here to spend your time with me, because what this is on the screen is 3 funded Bullinox accounts and 2 that I just keep in the background. This is my day. I'm done trading. There you go. This is real. You guys can all do this, right? You can do it without stressing yourself out. You can do it from a financial standpoint without really risking a whole lot of your money. So this is Bullinox over here on a VPS, excuse me. And then I already showed that. So that's all I want to show to help validate what we have going on here. Because what we have going on here is taking advantage of the best opportunity that has ever existed in trading. And I don't mean learning my strategies. I simply mean using leverage across multiple small accounts, using copiers, diversifying potentially across a few firms. If you don't like the payout rule one place, or you're concerned about caps or whatever nonsense a lot of you people get in your head. You people. What do you mean, you people? So I had one other position I was looking to get in here, which was in the NASDAQ at the -2s. We were down there a bit ago. We'll see if we get back down there. First time ever joining, this is called stay in your lane. See this lane here? This is 2 standard deviations. This is 2 standard deviations below. The yellow line right here is VPOC. The red line is VWAP. This is a volume profile. It's a perfect distribution today. Most of it took place in the middle where you'd expect, around VWAP and VPOC. You put the orders on the lines, you manage risk. There's more to it than that, of course, but that's the foundation, the starting point. All right, let me answer a few questions. Yeah, I mean, I really have no idea if it was real or not real, but I've surely have a fair share of people that come after me for, you talk a good game about other things you do. Show us. No. By the way, I don't talk a good game about it very much. I simply mention I trade the treasury markets. I trade options on futures in the treasury markets. If you join my group, you can get a free training that I did on options on futures. Maybe I'll do more training on that at some point in the future. Pun intended, or no pun intended. But what I talk a good game about is this. That's what I talk a good game about. What I talk a good game about is this. Now, I know that there are other Discord channels that have evaluations and payouts and all these types of things. I get it. I will argue, and a lot of people that are trading in this style, in this way, acorns to oak trees, we call it the TDG way, the path to these payouts is far less stressful. It's more predictable. And if done properly, these can continue again and again and again and again and again until such time as, yes, you are taken live, or you decide to take your money and trade your own account as well, which of course you should. I have several live accounts connected to my NinjaTrader every single day, because why not prove it in a real market as well? I don't know if you can see this down here. There's the account, 300483. That's an account. Has $5,000 in it. Made $72 today. Trading micros. So this is what I talk a good game about. Because it's not as bad, but it's still bad if you're buying these things and spending some money and a lot of your time and not progressing, not truly learning. Why not learn how to manage risk in a $2,500 account as opposed to manage risk in a $25,000 account that's all yours, where you are unlikely to be able to trade in a professional manner for quite a while? What do I mean by that? You are not well capitalized to trade the futures markets with $25,000. So the question was, is it better to do prop than do your own? Ideally, do both while you're learning. Aspirationally, would you love to get to the... You could earn an amazing living with about $150,000 of risk capital in the futures markets. Amazing. I'm not saying a millionaire. I'm saying replace your income, supplement and complement, and never have to worry about money ever again, because it truly is the dream that everyone wants. It's the lifestyle life. It's not going to be taken away by AI. I've done some videos on this. I'm focusing at least 3 hours of my day every day to AI tools, how to create the best types of courses that will be free. Everything free. The only thing I'm ever going to charge for is my time when I'm in the trade room. It's not totally true. If I end up creating an app of some kind that's basically my brain and everything I know in a large language model that's trained constantly, and you can ask it anything, maybe that's worth $100 a year or something. But AI and what's happening with technology, it's going to completely change the world. You guys all see this coming already. Maybe not as fast as a lot of people think, but I don't see how it changes risk-adjusted, skilled trading. Will things move even faster and wackier and crazier? Yeah, probably things are just going to continue to speed up. But algos have been in the markets for decades already. So I don't quite see why anyone would want to risk a lot of their own money to learn this skill, when instead you could buy 5 accounts from 3 or 4 different firms, stitch them all together the way I show in a lot of my blog posts, learn how to use a copier, learn when and if you want to copy things, and then get your leverage. You want to trade a mini? Here's how you trade a mini. Trade 2 micros and 5 accounts. There you go. You're trading a mini. All right. Okay, so let me make sure I get through these questions here. Is prop trading better than just trading your own cash? I already mentioned that. How do you like using the Renko BXT? That's the Renko bar that's, what is that? Is that the one, is that what they call their Renkos in here? I don't even know what that is. It must be this Renko in here, right? Renko BXT, yeah. I love it. It's a great Renko. It has some settings on the reversal size that I don't use, so I keep it the same way that they look on Ninja. But if I had more time, and if I was you guys out there, I would really encourage people to work with different reversal sizes, see what kind of patterns you can get out of different reversal sizings. And if you're not familiar with what these are at all, then you're definitely going to want to download the ebook that you see in the description down below, or take a free trial or what have you. We'll talk more about the benefits of these types of bars. There's really 3 benefits. One, for me, visually you see trend a lot better than you do with minute bars. 2, you get swing levels that you can work off of that you're not going to see on time-based bars. And 3, and lastly, and not as important, there's actual back-testable patterns that these things make, as long as you can backtest the true open high, low, and close of the bar, which we can. You have been able to do that for a while. It used to be that you couldn't really, I don't want to get into too much detail here, but anyway, price did not occupy all aspects of this bar here, right? You see that? The only bars in which price occupied all this space was, this is the high of this candle, and that's the close of this candle. This is the high of this candle, and that's the close of this candle. Right? So when you see wicks, that's why we call them brick wicks. All right? So the question was, how do I like the BX? I love these. This is what we invented these. Me and my trading partners and some others invented these things. So we love them. By the way, it is nice that gold's finally retracing a little bit here. I would not be trading gold at this hour much longer. I mean, the gold pits have been closed. The market's closed over there. All right, so I answered that. Hey man, just wanted to share finally. Can you guys see this on the screen? Let me scroll up a little bit. That way you can see the one I'm answering. I just wanted to share finally past 5 take profit 150 after blowing them with sizing mix up yesterday. You blew them and then you passed them? All right, well, cool. Whatever's working. Hopefully, I only got one message. Establish, protect, and respect your daily risk budget. You do that, everything else will take care of itself. And you know what else would even take care of itself? You can size however the hell you want. If you have a $250 daily risk budget and you want to trade 1 mini in the ES, great. You got 5 points. Have fun. Do whatever you can with 5 points, right? How many points do you have in the NASDAQ? 20 times 10? 12? You get 15 points in the, something like that. 12 points in the NASDAQ? Good luck. All right, Roderick, I think you should try the Apex static on and show how to grow it. So I did a video, or they created a little video that I said about my perfect prop program. And they edited it down. If you haven't, I have a short on it. But let me just go through it real quick again. The perfect prop program would be zero balances, starting at a zero balance with $1,500, $2,500, $5,000, $10,000 worth of drawdown. And you wouldn't be able to trade more than like 3, 5, 10, maybe 15 micros at the biggest account, right? So that would be your sizing. And then there would be a daily risk budget that would start at about 25%, and it could increase as the account size increases, or it could decrease as the account size decreases. We'd have to figure that out depending on how people do with 25%. I think that's way too big, but most people don't even want to have any kind of daily loss. They want to use their entire account value. So when it comes to the way these programs are, end of day, trailing, static, we've been through this a million times. So all of mine are, even here on Bullinox, there is no difference to me between the end of day and trailing. Does anyone have any idea why there's no difference to me? I don't go into any kind of deep drawdowns. I don't let big profitable days come back against me. I don't set high watermarks that you guys, you're just not trading properly. There should be a trailing drawdown in your own live account. It would make you think twice about over leveraging yourself and going for home runs and trying to do things. I mean, does this trailing drawdown benefit the firms a little bit more? Yeah, because you guys just can't seem to figure it out. So then by the end of day, the question was on the static. I don't see any difference between any of these. The static drawdowns, fine. They have a much smaller, most of the time, a really small initial drawdown. I think it's like $500 or something on it. So all that requires you to do is just start out okay. But then after that, since it doesn't trail at all, I don't know. Pick whatever you think is best. I don't really see the obsession with all the differences. And certainly people that identify their trading style has to requires a certain type of prop account that's either offered or not offered, or here's why all the prop firms are full of shit, because this is not real trading unless the account was exactly like this. You know what part the prop firms, most of them are allowing you to act like real trading? In real trading, you can deposit $5,000 and blow it all if you want. The broker will take you out before the balance is zero if it's a good broker. They'll take you out. They'll auto liquidate you and leave you with about $60 or $100 or something. All right. Yeah, I probably never have my own prop on that. So turned out I would have to do regulated things. I don't want to be regulated. I asked you yesterday and you cut off in the middle of your sentence, but you can provide an answer for a good trade copy to use with Tick Blaze and Prop Shop Trader. So it's going to be probably Thor, and I'm going to do Thor tomorrow. Okay. So there's an update that just came out in Thor. By the way, see the Dow? Look at this. Baby, go. Go, Dow. So Dow is up to this little level here where you would take some profits on some. One in the chat if anyone's long Dow. Came down, scared the kids a little bit here. Couldn't get below 45,000. So it's probably going to be Thor. That's all I can say right now. Some people are having ETPs working well for them, which is called expert trading programmers. And that comes with, you might try that out, because if you bought the right, I don't know what you had to buy, but they give you a license over there at, they give you a license at the futures desk for ETP, and they give you a license at Prop Shop for ETP. So you might check that out. And I know I promise a big game. This stuff will all happen. Just give me a little time. I will have a virtual private server with Quant VPS. It will be loaded with Tick Blaze, TradingView, the TradingView desktop version. Of course, you can just open a browser. NinjaTrader. It'll be preloaded with some stuff on NinjaTrader that you can choose to activate or not activate, which I will teach and train on. It'll have the Tick Blaze desktop installed, that is my desktop installed, and then it will have a copier for both for all environments. So it remains to be seen. It's probably going to be affordable indicators that you can license inside Ninja. If you already have Flowbots or whatever, of course you can use that. And then it looks like it will be Thor, because I just love what they're doing aspirationally. Right now it's a little clunky with Rhythmic, but Rhythmic sucks anyway. But the fact that you can stitch together a variety of different backends, including Project X, CQG, DX feed, all kinds of prop programs, Tradeovate. It's looking promising. So the VPS will come with all that, and all you have to do is decide what you want to turn on, what you want to do. You do have to pay for the VPS, of course. The VPS will be like $100 a month or something. Okay. Okay, so some of you guys are long there. With the real futures accounts, is it possible to not only blow the account but owe money? They talk about that. Yes, it is. Yeah, I mean, if you have a huge position on and there's some sort of big gap and stuff, of course. Whenever you, so the question's about, could you lose more money than you have in your account? Yes. Everything that you sign and all that long paperwork that you see when you open a futures account, it points all of that. It points all of that out, because futures are highly leveraged product, and you're actually just doing them based on margin. So you have a very small percentage of actual money relative to the size of the position and how quickly it can move. Technically, that can also happen in the stock market. There are things, margin calls if you want to keep your position open, or they'll auto liquidate you when it gets, below a certain level. Tasty has like zero tolerance. They liquidate all over the place. I've heard some kind of horror stories about things that were kind of not too cool, but anyway, the broker reserves the right to do whatever they want. The reason I really like Interactive Brokers is because they're super conservative on the front end. So they don't provide any day trader margin. So since there's no day trader margin, you are fully margined for everything that you're trading. So as I've said this before, you want to trade a NASDAQ at Interactive Brokers, you got to have 20 grand, 18.8 or 20 grand for one. Can't push the button. So, I mean, I've shown this over here before. Let me go up to this. Let me go up to this screen. So this is a live account connected to Tasty. Okay, so it's a live account connected to Tasty. And let's say I go and come down here and I put in an order to buy. You see this? Account order rejected. This has $7,800 in it, and it will not allow me to place an order. An order to buy one ES. You guys see that? That's good. That's responsible. Because the amps and even the Ninja brokers of the world, because Ninja is just basically this firm called Mirus. They bought Mirus when Mirus almost went out of business because they tried to create their own data feed, and then Dan Dorman had to come in and put up $100 million and save everything, and now we have Ninja brokerage. So anyway, the stories I could tell. All right, so there's the answer to that. With a real futures account, you could end up owning more. Is NASDAQ is rolling down? Oh, no, it's not. Ooh, it's going up. NASDAQ's going up. I wish I was long. I did what you said today and traded, right? 2 micros on the MYM and made 111 times 4 accounts. Look, there you go, Brian. All right. Hope you get us a good deal on Thor. Thor's pretty cheap already, but I will put together something that, especially for the launch when I do the review. What do you do when the market keeps trending up into the bands? Any stop DCA? Okay, so I answer this frequently all the time. The first thing is be far more intolerant on shorts. All right, I'm going to save you guys a ton of money. The challenge that a lot of traders have, not all, I know there's some that will point out that they're only long. They're long only. They don't care. That's all they do. That's all they feel comfortable doing, so they're long only. That's fine. That's way better off than what happens with a lot of traders in the Forex and futures markets. Because it's so easy for us to hit the sell button, right, and to go short, as opposed to in the stock market, it's not quite as easy, right? There's a lot of people out there trading very illiquid stocks and have to get borrow rights and all these types of things. So we can just push the button and get short. So to answer the question about, and Dams, I don't know if it's your first time here, but if you want to come over and check out a trial or download the ebook, I mean, I must talk about this a million times, okay? So the first thing and only important thing is what is going on with your trade relative to your DRB, your daily risk budget, okay? So the answer that I give to all these questions is always it depends. What happens if this scenario is happening? Do you add another one? Do you have a stop? Where should your stop be? All these types of things. Before you worry about any of that, please just start with having a DRB and have that DRB be about 10% of your account if you have a smaller account. If you have any account less than $15,000 in actual money, your DRB should be about 10%. At 15,000 or 20,000, I would suggest your DRB goes to about 3 to 5%. But you guys are probably trading prop programs in which you're trading a $2,000, $25,000, $5,000 account. Have a 10% DRB. Then every decision you make is based on that DRB. So rather than go into what would you do in a particular scenario if it got outside the bands, start with these facts. If there is more than 50% ATR, no, in fact, that's not even required. In all instances of the cash session, 82% of price action on the ES will take place between 2 standard deviations. In all instances of the New York cash session. If prior to the open of the New York cash session, there is more than 50% ATR, the probabilities go even higher. And the closer you are to 100% ATR. In other words, let me give you an example. If the S&P had a 70-point 7-day ATR, meaning that the expected range over the course of the 5 trading days that we trade would be about 70 points over the entire 23-hour period, and you wake up and the market has already moved 71 points from high to low, or low to high, however you want to look at it, the probability that price stays inside of those bands is now nearly 100%. They have already adjusted, the volatility is adjusted, and 2 standard deviation moves are not going to happen when you have already put in 100% of the expected range for the day. Can I get a 1 in the chat if that makes sense? Let's just start with this concept. Even if you're never going to come over to my trade room, you're not going to read the ebook, if you want to take anything away from, I started this whole thing with this nice lady, Tori Trades, who talked about losing $250,000 in a platinum trade on 40 contracts and sharing it with her audience and all these types of things. That is so far removed from, I don't even know what she teaches, but who cares what she teaches? The only things that matter in trading, this is why I do these sound bites that why do you think I put sound bites up on social media where I say that candlestick patterns are bullshit and trend lines are bullshit and most indicators are bullshit, they're not predictive of anything, and because I just know, and I know that it's clickbait for people. They just love to react to that. No, I use Fibonacci and it works for me and you're a dipshit. Okay, great. I love that. Thanks for the click. Thanks for the view. The algorithm now knows that people are engaging with Rod's content. But if you take anything away from this, I started trading in 1991 at Merrill Lynch professionally. Then I was on the syndicate desk. I traded the first E-minis in 1997. You just have to trust me on this. The only strategies that work have to account for volatility and volume. That's all that matters. So if you like this order flow stuff, great. Great. That's volume. That's a print of the volume. I love it. If you want to use TPO, cool. If you want to use a volume profile, cool. But you have to add volatility in there too. And the easiest way that I can teach this is to just say, use this simplest thing as of the average true range over the course of the session. You might only trade for an hour of that session. Who cares? But you need to know, I get all frustrated when I see stock people teaching the ATR of the 30-minute. Who gives a shit what the ATR on the 30-minute is? Well, that's the time frame that I trade. No. You need to know where it could. Well, I don't know. So I could go on forever on this. But anyhow, volatility and volume. Those are the only 2 things that matter. Then risk-adjusted returns. Overlay risk-adjusted returns. So then the answer every time to what do you do on any individual trade when something is going against you, you filter it through all those things. Am I short or long from a particular area with less than 50% ATR? Am I short or long when I'm already up on the day? I'm up nicely on the day. So can I take a little bit more heat here or what have you? And another concept that I've introduced that seems to be dead-ass simple, and I probably should have talked about this earlier, is if you just want something that's just math and you don't even have to worry about anything on the chart, don't let any one trade eat into more than 30 to 35% of your DRB. And let's say your DRB was $300. Don't let any trade cost you more than $100. If you see $100 and you know that it's truly down $100 and you're just looking at your P&L, just hit the close button. That does not make you jittery. It doesn't make you not confident in your strategy. You don't have to be some sort of robot that lets it go from, to stop and target perfectly all the time. In fact, none of you are. All right, there we go. What's the next thing? ETPL is good until it's not. Yeah, Thor. Da-da-da. Reliable S&P data was not really available until the early 2000s. The E-mini ES, so the question is about, is that still remain the same? Yeah, I've run the in fact, it's getting even higher, and the correlation is getting higher too between the markets. The reason that I don't make any of those claims or have the time to go back and back test the NASDAQ and things is that they're just way too illiquid.
Order filled.
Everybody
Position
loves this
closed.
NASI, but the NASI is
Order
just a
filled.
terrible instrument to trade.
Position open.
It's just an awful instrument to trade. I know you guys love it, but I throw around occasionally just purely for entertainment purposes. And yes, I am resting an order to be long if it reverses back down here, but it doesn't look like it's going to. Yeah, we went from the -2s in the bid zone up to VWAP. And look at the Dow Jones doing it as well. I had some outsized days here. This is a $400 winner in this account. I had 700 in a few accounts. So micros make money, everybody. I never look at the SPY to trade the ES. Nope. Keep it simple, folks. You don't need all these additional filters. Trend and Tran and Tron and tricks, and you don't. If you end up coming into our trade room, what you'll hear, what we have even AI songs for this, just put the orders on the lines. Put the orders on the lines. If you're over here on, by the way, I hit target on this S&P, I think. That's pretty nice. Did I hit it over here? Yeah. Ooh, look at this. All right. Boom.
Order modified. Order filled.
Let's take next target here at T-line.
Order pending.
I know my face is in the way there a little bit. Let me move this over. You can see, I'll move it down a tad right there. There we go. So we call this a Kermit candle. Nice green candle happening there. Anyone long the S&P from, look at this distribution here today too. Okay. Volatility and volume, it's all that matters. What's the 7-day ATR on the S&P right now? 65, right? What's the total amount of range on the ES today? 39, right? Nice, beautiful range-bound day. 65 potential or probable or average. We've only done 39, so why don't we come up here? Yeah, put it even up the top. See if we can get a fill at 64, 62. There's a look there. So if you can see, I took this trade from, are we seeing the screen? Yeah, I'm on the right screen. So big white arrow. If you guys are tired of me talking about content influencers and risk is all that matters and you want to learn a strategy, here you go. You get long or take profits on shorts in this zone here. You can take profit here. I ended up taking profit right up here. I hated these lines initially, but now I kind of like them. Because you can't hide from this either, right? See that? See this? I mean, I'm not hiding. I made good money in gold today, but you know these are losses over here that were manageable. The steeper this line comes at you, you know, the steeper the line, the better, right? In terms of your profit. If it's coming over here from the left, not great. But anyhow, there you go. There's the trade. You guys can all learn how to do this. Does it work all the time? No. Does it put probabilities in your favor? Absolutely. Can you learn the levels that you should be involved in 5 minutes? Yeah. 5 minutes. You could take a short here, but I'm going to use it as a target right there. So there's the target. And then to be responsible, honestly, I would run a sell limit. Oops, I mean a sell stop here. Okay, and probably trail that up. We don't need to be a total hero, right? It's late in the day. We already had our market on close orders. All right, so I see the things that happen all the time. I'm just going to read this. You know, you're long. So the spirit of Mart Mann's question. Don't worry about it. That's it. Just do not worry about it. Or the question I would ask you back are you are you having no more than 2 big R days in a 22 rolling trading sessions? And then the rest are a mixture of small r and small g. And then what you're trying to do is figure out how to optimize for bigger moves, right? Or do it. The only way you can do that is you just have to have more inventory on. So once you learn how to manage risk, you'll go from a 1 to 2 lot trader to a 2 to 4 lot trader in the Dow Jones, and then this problem will take care of itself. You can take one at -1, you can take one at VWAP, you can run a sell stop on the other, and you can let the other run. All this multiple target stuff, there's so many people that love to set up all these multiple targets and ATMs and all this bullshit. It's so overly complicated. By the way, talk about copiers. It's never going to be copied correctly. So what I'm trying to teach, there's a reason everything that I do has a methodology, because I have been also teaching for 20 years. And I've seen all the mistakes, and I've even said this, before the micros and prop, everyone failed. Because everyone was over leveraged and using their own money, and it just was not working out. And they couldn't trade like me and my business partners because we had a lot more money than them. That's how I started this whole stream today, talking about these content creators in this space that are, even if well-intentioned, they're doing harm. They're not selling, makeup or supplements or whatever. They're telling people how to do things in the financial markets and building really bad habits and saying things, strategies aside. So profits will take care of themselves once you learn how to manage risk. I know that's not the answer everyone wants to hear, but the only way that I'm ever going to get to a target all the way up here is I have to have inventory on, right?
Modified.
And the only way I can have inventory on is I'm a 2 to 3 to 4 MES trader eventually instead of a 1 or 2. On the flip side, this morning in the Dow Jones, there was plenty of opportunities to trade just a little chop and make all kinds of money before it made the run. There'll be plenty of days in which it chops and you do that and you make it, and then it just falls off, and then you have a losing position that you have to manage and get out of. And then what gets inside of people's head is like, oh, well, I was just too greedy, or no, what you weren't doing is just making it systematic, mechanical, repeatable. What's my daily risk budget? Where do I trade? How much size can I put on? Because rather than on this S&P trade being concerned with where I'm going and optimizing a profitable trade, by the way, that's basically called your maximum favorable excursion, MFE. What's your MFE versus what's your maximum adverse excursion, or MAE? Okay? Those are stats you should begin to learn and understand, and you can get those from any trading platform. You can import to any decent trade journal, and it will give you those particular stats. So don't worry about it. Okay. If you were long, we already answered that. When will we have vol and ATR data percentage in nice, easy, and format and tick blaze? The market analyzer view in tick blaze is not part of this latest build, so I can't give timelines on that. I don't know. Rod, you go back on MGC and teach on graceful exits you took on those shorts and the reasons you added to the shorts even if the trade was going against you. On this GC thing, I mean, it was pretty simple. These are all one lots. These are all one lots in a little, well, not early here. I mean, I shouldn't say in early. I'm in early in hindsight. I'm just getting short in the offer zone here, right? We all know that gold has just been outside day ups for a while. So the general better thing is just not fight this. But in terms of my thought process, short in here, these are all singles, okay? And then this last one ended up being, because remember I have 10 accounts connected here. So I was trading one contract in each of these accounts, not with a copier. So here's 5 or 6 right here, and then here, and then here. So really not a whole lot going on. Held for some heat, and this trade is essentially just kind of lucky. I saw the burst out of there. Generally, this is a pagoda top, by the way. We're making this sort of series. This could have been a pagoda top. It was invalidated when, but this ended up being the rounding thing there. So really this trade should have been like right here. There should have been like a sell stop right here and then would have caught that. But anyway, just nothing particularly. The exits were not all that graceful. These are the first time the trades went against me. In other words, long-winded way of saying, I didn't even start trading gold until about 9 o'clock when it was already up $30 or $40 again on the day, and it ended up just going up another $8 from there. So this was just a very manageable trade over here. Yesterday, that was not the case. I lost about $100 to $200 in each account.
Closed.
All right, we hit target there on the S&P too, I think. Yeah, look at that. Boom. All right, let's cancel this sell stop.
Order canceled.
All right, let me, I don't want to do any overtime today, so let me just get through the rest of the questions. She does swing overnight trades on P&L with large caps. Okay, great. Okay, so No, that's interesting. So that gives me a little bit more but I still think everything about that is toxic. Why show a big swing? I don't know. Maybe if she's teaching that, then that's great. But I just get a sense that the vast majority of people, of 500,000 people following a content creator like that, their ability to do anything like that is very, very limited. So the benefits of that and even showing it and swing trading and all that kind of stuff is it's probably negligible. I'd love to hear that answer. My risk management is great, but I'm not in winning trades. Time will work that out as I practice. It will. It really will. You got to stay in the game. And another thing that you might try if you're finding, so I did a little video where I don't know, I can't remember what I say half the time, but apparently at one point I said, hey, instead of death by 1,000 paper cuts, think of this as being life by 1,000 paper cuts. So what I mean by that is if you can find a way to scratch a lot more trades more often, okay, unprofitable trades, just be super impatient with them. Don't even worry. Just make it a little game like, oh, all right, I'm in at the -2s and it went $25 against me. Fuck it. Hit the close button. Just scratch, take a lot of small losses all the time, till you can find that level that just works out. And then practice, okay, I know that I can take small little losses. I take a lot of small losses. And now my problem is I'm just taking a lot of small wins. Okay, no problem. What the challenge is that you're probably taking close to your full allotted DRB as a percentage of your total DRB in the trade. We just mentioned that. So you're taking a $100 loser, 1/3 of your DRB, but your winners are $20, $50, whatever. Okay, you solve that initially by just having your losers be smaller too. Now I know that sounds simple because it just is simple. It really is simple. But at a higher level, just respect your DRB and look at your stats over the course of 22 trading sessions and see where you're at. Because as long as you're managing risk and staying in the game, the skills will improve. Okay? Another way you can do it is you can become a creator like myself, and you can stream, and you can have 8 different platforms open, and you can be in positions, and you can be off talking about Tory trades and just not even looking at them. And then you can have trades like this. Just become a streamer. You know? By the way, I mean, I'm not cherry picking this, right? This happened today. This is about as picture perfect as it gets. We come down. How much time did we spend outside the bands today? You want to just measure it? I don't know. How much? Let's find the bell. Okay? The bell's somewhere in here, right? All right. You want to say we're outside the bands? I don't know. Is this a minute? A minute maybe? Okay, we're outside a minute. By the way, this trade was right during the room too. I wasn't in it, but I was in it over on I wasn't in it here. I was in it on Ninja. Here's a long I took. Who knows why? Here's a long I took and closed for a loss. See that? Okay, here's a long. Closed for a loss right here. Probably a time and trade. and then some longs in some other accounts that ended up working out here. So of course I'm half joking, but you get the idea. There's something to be said for put on the trade, put your stop and target, and just turn off the machine, right? For some people that's useful. I think there's a lot of benefit to feeling what you're feeling while you're looking at it. So, all right. What else do we have here? When you get a chance, run through some of the great trades today. I think I just was. I don't know. Let me point this out. This trade right here from 64.40 closed at 64.29. That's a great trade. It's a $50 loss. Great trade. Here's the plus ones. So keep this in mind. In order for me to do this particular trade entered at the same time, I think, went through all this heat. See, the lines don't show you the heat, right? So the maximum adverse excursion on this was probably $50 to $75 to end up with a just $50 win. And then this ended up being a $110 win. By the way, I think I've mentioned this before. I don't trust this daily P&L thing on here at all, so I wouldn't be using it yet. It's supposed to be the daily P&L for that instrument for this, for everything, I think. No, it's for the instrument for the account. For the instrument for the account. So it says I made $63 there, and I made $278 there, what have you. All right, anyway, that's the recap on that. So that's it. All right, everybody. How do you sort between which instruments to trade at any given time? All that is relatively random. So I'm going to be trading MES, MNQ, MGC, MBT in terms of the prop programs, and occasionally MNQ. There's people in our group that's all they trade is just MNQ. So I'm going to trade MES, MYM, M2K, occasionally friends trade the Russell, and gold. I said in my room this morning that I was probably going to be very hyper-focused on gold just because it was popping. It was another outside day up, and I've traded these enough as things keep making new highs that for me, I know I can manage risk and pick tops in a profitable manner, and that's what I did today. Most of the profits here are just from gold. These are just gold shorts that are similar to the gold shorts that I had a few gold shorts on this morning during the trade room, and then I just sat and waited, and I went to the gym and did all that stuff, and I came back, and I started getting short right in here again over on Ninja as well. And I didn't even get all the way down in here. I think I covered most of it, like the 25s. So but I did get the 30, I got the 40s, the 36 40s to the 25s. So with a two lot, that's $300, right? All right. Anything else? Last question or palladium, platinum? Yes. So, all right, everybody. That'll be it. Stay green, trade like me, and we'll be at the trade room tomorrow. And again, if you're watching these streams and you really haven't interacted with anything, I don't spam you. We send out quite a few emails now because we got a lot to say. But grab the ebook, check out the Futures Fanatic Foundation course. It's all free. And then if you think you're ready and got some time in the morning, the best time to learn these kinds of things and the best time to profit in your prop accounts is between 5:30 and 8 o'clock. That's Pacific Standard Time. So that's basically 8:30 a.m. Eastern till about 11 Eastern. That's the best time where you can learn the most. I know that there's people all over the world. You can't all do that. But if you can focus on that time, and plus that's the time that I'm telling you that price stays between these volatility bands, right? Because they're going to compress and reopen at 6 p.m. Eastern Standard Time. So that doesn't do for anything. You can't trade this style or do these things when you have 5 points of range or 10 or 15 points of range. Just don't trade with that type of range. Oh, by the way, that's another reason this is the best time ever, is because for the first 20 years of my trading career, the S&P had like 8 points of range for the whole day. Now you get 8 points. You get an 8-point move in 1 second when things are moving. All right, thanks everybody. We'll see you tomorrow. Be good. Bye-bye.